Ladies and gentlemen of the crypto space, we're having a Friday, October 25th at 11:33 a.m. And the volatility continues, the range boundedness continues, and we've literally gone nowhere all year. From a Bitcoin perspective, we're sitting at 68,000. We're decisively above monthly closes back in 21. We're above the all-time high closes from 2021 all year, all 2024. This did not happen in 2019 and the first quarter of 2020. Nothing has happened. So basically, what that means is everything anyone has done in all of 2024 it's almost irrelevant from a validation invalidation standpoint. Like, if you're trying to figure out what is good, what is bad, and you're basing that on behavior in 2024, it's probably erroneous information being used to make those types of observations slash decisions, so on and so forth. This is completely range bound. Why? What does that mean? Why is that the case? Because next year, or whenever, but likely next year, when the system makes its expansionary phase with regard to systemic liquidity, it's upward expansion, and crypto does what it does. That's your information of what's going to outperform. So, in a period where we have basically zero sum, marginally positive, marginally negative, basically zero sum all year, for the last months, little to no endogenous capital expansion. You can't make choices based on that, but you can make choices when you have a positive sum environment where you can make conclusions about, all right, this is doing better. So, how chart, this Bitcoin chart is absolutely wild. Um, Not much new to talk about from a Bitcoin perspective. And then on the monthly, looking at the trend drawing from like a daily perspective, what does that mean? I mean, basically jack shit. We're basically range bound. This circle right here back in 2019, early 2020, is this structurally a similar circle to this. Okay. Except now it's just completely compressed vertically. It's astounding. Um, basically, I guess this is a decent stream to talk about a lot of sentiment from an altcoin perspective and like Bitcoin dominance and Ethereum underperforming. And it's not the most important thing I can offer you folks is not hopium slash copium. It's more so about time and what's important and wasting time thinking about different things. It's more important to prepare for the future and think about what you will do different next time, how you will do better next time, and that there needs to be a next time because if you are taking away your experience over the last years, as there will be no next time, that equates to there is no future because there is no turning this off. There is no undoing what you've done. There is only doing better. That's the most important takeaway. So you either did good, moderately well, or piss poor shit over the last couple years. Um, and then you're either going to do worse, good, or better next time. Because if you do nothing, then that defaults to you're going to do worse. So, for instance, if you take all your last year's experience, be like, all right, I'm going to try and break even and get my money out. You're fucked into the future. You have no future from a employment and savings perspective. That doesn't work. So this is imperative to do better next time. So, for instance, if you lost money over the last years, your goal should be to do better, which would be to not lose money. Let's set the bar low, ladies and gentlemen. Let's at least not lose money in the next 4 years. So if you actually make money, you're outperforming your expectation. Um, but that is what you want to see from capital management, marginal improvements. You want to do better. Okay? So there's no turning this off. And there's no don't wallow in your sentiment. Oh, I could have done so much better. I could have made better choices. I am very open on Discord about I should have waited to deploy capital in 23. That is my biggest takeaway. My capacity, my methodology to adhere to my capacity to adhere to my methodology of purchases of cash flow that I am more confident in and comfortable in than ever. So that is fine. That's going to produce some serious volatility from a net worth perspective, and that's okay. So your objective right now should be to identify what to do differently next time. And in that regard, I just stated my observation. You should have been sitting on a fatter stack of cash to be able to make better choices of what to acquire. And I needed to pay closer attention to the macro indicators that I understand so well. And Bitcoin dominance is a component of that. And it's not deploy into Bitcoin because Bitcoin's outperforming. We haven't even started the cycle yet, is something that I and many folks are trying to really hit home. And it's very important to understand. Nothing has started with move at 127. Nothing. Nothing at all. So you don't pile into Bitcoin for a 3x at the bottom. You have your allocation, your collateral, your savings, and you could deploy to it in appropriate sizing to maintain an appropriately structured portfolio of collateral, which is a component of the cash position because it's a cash equivalent. You could liquidate, you could spend it as a cash because it's instantly convertible to s- some sort of settlement currency. Okay. You don't deploy into it and then rotate out of it because everything I discuss here is not from is from an investment or a capital management standpoint, not from a trading standpoint. So I'm not going to deploy into Bitcoin to transfer into some other denomination at the opportune time. Because the last thing I want to deal is trying to figure out what the best time is to do something. What is the opportune time to change denomination? No, because that is what everyone else does. And I will not do what everyone else does. So, what I will do is very much like a DCA, but it's not a DCA. It's a much more robust. DCA is like, oh, I'm just going to buy $100 here and there. No, I'm going to buy appropriate position size of Bitcoin and other cash equivalents to add to my cash position based on the amount of capital, free capital, reinvestment capital, as my account is labeled, how much is available. Respecting position size, respecting the amount of reinvestment capital that's available, and that's imperative. That's it. So it's not DCA. That's being strategic and methodical. And right about now, the reinvestment account is underfunded. And in retrospect and hindsight, I started deploying too early in 23. I don't give a shit about a 3x, 3x, 4x, 5x. That doesn't get a relatively small, mid-sized portfolio anywhere. That's not going to do shit for your $1,000 portfolio. A 5x, a 10x. That's not even remotely life changing. That's not even, I mean, it's keeping up with inflation. That's savings, and that's cool. That changes nothing about anything that people would consider significant about their lifestyle. That's why we invest in fintech. And that's why we needed to wait for a more opportune time for the fintech to have a better macro backdrop. And that macro backdrop needs to consider Bitcoin dominance. Anywho, so DXY, hopefully puts in a resistance on the monthly time weighted average price, as we could see in the little circle. It's really as simple as that. Keep it simple. Hope that holds. I mean, you push above 107, the whole system's going to fall apart. It's literally going to start. Uh, it's like I don't know. It's just going to fall apart at the seams. It'll be an absolute catastrophe. You'll have a move blowout, and it's really yen driven. They if Yellen isn't over there with Japan trying to finagle how to get a bid under the yen, strengthen the yen, which would weaken the dollar, which would bring down yields. We look at take a look at this. Take a look at this on the monthly. What was I looking at yesterday? Was it the quarterly? No, it's the monthly. You really want this time weighted average price to hold. Look at the monthly time weighted average price compared to 10-year time weighted average price. I would love this is the 10-year yields uh, are just below the time weighted average yield. I think that is the appropriate way to describe that average, moving average on this chart, time weighted average yield. And if this holds as resistance, that would be interesting. If there's a divergence there, the yen breaks out. I would rather think of this as which is leading and which is lagging, or rather which is lying and which is telling the truth. And I don't know. We don't have an answer to that, but we will soon. But look at that. I find that very interesting. Dollar versus yen versus 10-year treasuries. Um, 6 days. If this holds as resistance, that could be a forward-looking indicator on the dollar rolling over against the yen, or at least holding this time with average price. So this is an aberration to the upside for this month's candle. And then we have a continuation to the downside. As the yen strengthens, there's all the knock-on effects we've talked about. So they want to catch a bid in duration. They want the yields to come down. Fed funds, they just cut it, but 10-year treasuries are going up, which is driving up mortgage costs and so on and so forth. So their Fed policy is having no effect on the long end of the U.S. debt market. Um, so the question becomes, 6 days. We'll know more in 6 days what plays out. And all this relates via knock-on effects back to Bitcoin and whatnot. Ethereum has a nice chart though, pretty decent because it has higher lows dating back to 22. Bitcoin has a bit of a different presentation because it is much further along. Higher lows, sure, but it is deviates the upside. So Bitcoin's at a premium, a significant premium, whereas Ethereum's at a discount, but it's still on trend. It's literally at the lows from a dollar denominated trend perspective. Fastest horse, fastest horse. That shit'll drive you nuts. Oh, which to hold Bitcoin or Ethereum? You just hold some shit, and they're all grades. Do you think you get bonus points? Do you think you get a pat on the back for having the perfect portfolio? Oh, I did better than you. Oh, you did worse than me. You suck at capital management. Fuck is matter with human beings? What's the matter with people? What kind of insanity is that? Comparing and contrasting and who did better and who did worse and who's winning and who's losing. I like these robotic intro images, the robots. And I love to try and think like that and remind myself that every damn thing I think that has an emotional interpretation means jack shit. In the end, all that matters is did you make extra capital? Did you capitalize between 2019, Q4 2019, and now? You take out any capital. And were you able to improve your lifestyle? Did you learn anything? Did you learn anything about capital management? Did you learn how to do better next time? That's what matters. That's some robotic shit right there because you got to get through all the emotional nonsense of the human and realize most of the narratives are absolute nonsense because it's based on better and good and all that subjective stuff that'll drive folks mad. The odds are almost 99.9% of people did not execute a perfect portfolio. And it's more than that. Maybe was it one person sold the dollar top? I mean, come on. No one's perfect. And it doesn't matter what degree of perfect a person achieves. What matters is the process. And the process is mechanical. It's robotic and it has there's no emotion, there's no business. Emotions have no business in it. So at least assess your shit from that perspective. Which is like CAGR. That's why I like the CAGR so much. Your compound average growth rate. And that's a very reasonable way to assess things considering drawdowns and multi-year time frame inspection. Hope that helps. I have a couple of things up, but it's stuff that I talked with Beavis about. I'm really liking what Curve is doing. I don't care what people's thoughts are, and I don't. And everyone makes their own choices in allocating capital, and I don't regret doing what I've done because the exposure that it offers is what I care about. It's like when I talk about velodrome versus aerodrome. You buy aerodrome, you have exposure to base. Great. You have exposure to Coinbase and their arbitrage and their on-chain business activity. That's a big deal. That's it. When you have exposure to Velodrome, it's clearly underperformed Base because Coinbase's online arbitrage, on-chain arbitrage, but Velodrome offers you exposure to the entire Optimism superchain. So what I care about more than emotion and more than gains to outperformance is what can I get exposed to? So I come back to that as a very meaningful statement. Airdrome has done better in price, but Velodrome is a better allocation because it offers, significantly more exposure than base, significantly, and Kraken at this point, and they're on-chain Bitcoin. So, and it literally is super chain narrative. Velodrome is a significantly larger narrative compared to Airdrome. Meanwhile, they're the same protocol. I don't care, and I don't see why they shouldn't entertain folding Aerodrome back to Velodrome. Like, you have the super chain on Velodrome. You could literally select any of the optimistic chains. What does it even mean that you can't select base? That's weird. So, but that's probably going to be what it's going to be. It's probably made this one-off for Aerodrome because it was early in the development cycle and they needed to get it deploy out, and that's how they could get it deployed. So it is what it is. And what we do, so you don't have exposure to a horse, but Velodrome offers exposures to how many horses across the optimistic superchain network. That's the thing with Ramses. Ramses will give you the same thing for the Arbitrum orbits, of which is like 50 orbits. And fine, optimism is ahead from their zero knowledge proofs and whatnot, and the degree of decentralization. Do you not think Arbitrum catches up? Do you think the technology gets invalidated? I, so much opinion, and all that matters is one word: exposure. The more exposure you have, the more potential you have for one thing to do very well. And that's all you need. That's it. One thing. Don't drive yourself mad. I'm sure all of your portfolios have been in the shitter and suffering, maybe at all-time lows even. Stop thinking and let time pass. And all that matters is, do you have free capital to make an acquisition? Does it matter? What matters is if you have an adequate amount of capital for an appropriate position size. And if you don't, you have no action you can take. And if you have no action you can take, you have no action you should take. Therefore, you're not taking an action. Therefore, any thought about it is irrelevant. Any regret or sentiment or damn, I could have done better or questioning life choices. I should have been a farmer. No, that's driving yourself mad. Don't drive yourself mad because you have to be here for the coming cycles. What you need to do is learn. So if you have to write some shit down, write some shit down. What did you learn? What could you have done better? And do better. I'm sure you're all employed, so no matter how bad you did, you still have paychecks. So you figure your shit out and you continue to make choices. Except your next choices, hopefully, are better. That's it. That's it. That's the whole process. Rinse, ton curve yesterday, the hackathon. Was it? There's a couple of protocols on ton, but whoopie do. Like Torch Finance and what was it, Crouton that Mitch was talking about, and those are the two winners, basically. I think I'm not deploying capital to ton. You think people on Telegram know anything about capital management? No. Do I want exposure? Sure. Do I have exposure to ton? Yes. Done. I already have exposure. If Curve is licensing, I'm sure when those governance protocols go online, part of the licensing is kickbacks or governance, cash flow integration. So whoopie do. That's the thing. I already have exposure. If you're missing exposure, think about how you can get exposure. And if you have the capital to get exposure in appropriate size, respecting overall portfolio composition. That's it. Follow the rules. And that's all you can do is execute the rules. Anything beyond that, you're thinking too much. Arrow, good morning. DCA man, good morning. Anyone else have a problem voting on Ramses? No, I believe everything is working. They did, if you haven't checked Discord, did have some issues, but votes came through with regard to rentals. There was some vote rentals from Frax and Alchemist and some lingering stuff here, but everything looks like it's working. I don't think there's any volume for these particular LPs. Arrow, we always talk about how to optimize shit over here. If I'm about to get 75 chip from vote rentals, um, and no volume, so no transaction fees, it's a bad week. Coming off a relatively large, what was a large week for tapioca before shit went south, that was like a $400-500 week. So, big percents because I was like 280 from the road rental, and it was like another 120 um, from the RAM. The road rentals applied to the LP because I was LPing. I don't know. That was a very nice week. And now if I'm back down to 75, man, I'm scraping the barrel. It's the 25th, and I just finished accounting because today's Friday, and I do the accounting on Thursdays. And this is the lowest income month in the last 3 years. But what do I often say? Arrow, you appreciate it. Still greater than zero. Still significantly greater than zero. And accumulatively, um, still quite an impressive number to say the least. Period. So you always got to keep things into perspective, especially things like that. I'm not no problem with Ramsey's extra crispy, my opinion or my experience. Teddy Rose, I lost a lot of money trying to play the meme game this week. Not going to be doing that anymore. I knew better. I guess I needed to learn this lesson the hard way. Yeah, almost everyone loses in the meme game. So what you see on social media is the winners. Makes sense. You're losing. Nobody's like, yeah, I lost everything. No, I'm up 5 billion X. I turned $1,000 into $3 million. All right. Yeah, few, the few. So everyone loses. And obviously they keep doing it because otherwise you wouldn't have those big winners that turn 1,000 into a couple million. You need massive monetization to do that. So all right, I don't even care. I don't have that kind of goal or expectation. and I certainly have a much longer time horizon, so I don't need those big wins. $1,000 into 3 million. A lot of people really want that, no matter how irrational it sounds. It could be me. It could change my life. I could have a $3 million and have no fucking clue how to manage it. Sorry, I'm just venting a little bit because that's really insane. You realize if I could turn $1,000 into $3 million, that would change everything. No, it wouldn't. You'd be neurotic. You'd be running around like a chicken without a head, not having a clue of what to do. You'll either lose it all, spend it all, and you certainly won't figure out how to make returns or cash flow off of it. Like how many of the lotto winners make 100 mil and they spend it all? Oh my God, that's insane. Because you could literally put it into 30-year bonds and have the freaking US government just pay you like $5 million a year. Sit around like Billy Madison, back to school, back to school. You could literally just sit around and do nothing, and the government just pays you to sit around and do nothing. And you never spent the 100 mil. Oh my God, people are so horribly naive. Anyway, whatever. That's why we're here to talk about how we could do things a little bit better. John Steps, good morning. Cap, BTC Nvidia chart has been in a fascinating downtrend since March 21st on the weekly. Betting things will get wild when it breaks. Yeah, I don't really care about tech too much because crypto is tech. That's the thing that most don't get, and they've put crypto in this separate category. But this is fintech. This is basically PayPal, Stripe. It's all the same. And what folks don't understand that I try and drive home always is business and fintech, but banking, credit, foreign exchange, dollar liabilities, derivatives, so on and so forth, all the shit that we talk about. So this is literally the same as Nvidia. That's AI, and this is banking. But you can't go on the New York Stock Exchange or Nasdaq and buy a forex market. I mean, really buy it where you actually get a dividend. That's the whole thing we've always honed in on and tried to focus on. That there is no difference between these types of investments that we've done in our portfolios as compared to stock exchange or Nasdaq. This is just tech, except this is actually good investments, even though they're volatile. You have no chance. You think Nvidia is going 100x the money? Well, you get a 1x or a 2x out of Nvidia, and that's really changing everything. No, it's gonna change nothing. So yeah, I agree. So Bitcoin's gonna do some multiples. I like that thought. You know what I thought I like even more? Just letting the market, because the market's gonna market, and people are gonna drive themselves nuts over it. And what the thought that I like the most is exactly what I told myself I was gonna do better next time. I am not going to drive myself nuts. In fact, I understand it and I'm prepared for it. Work hard for it to be this cool and calm. There's nothing that will surprise me, including the depreciation. And I know more or less, not really, maybe. I know more or less where the portfolio is going to be between 2026 and 2028. And I have a sense of maybe the revenue, or maybe I'm completely undershooting everything. That's my general sense. I'm probably undershooting everything. And that's from a dollar perspective, because I understand how the dollar works. And if you monetize this market to like a half a trill from exogenous capital, USDC, USDT, and we get a bubble, a credit bubble of endogenous capital up to a half a trill. And now you're sitting around with a trill on chain. All right. So you're at about what, 160 bill right now. So you go 6x, 7x on dollar supply, and you have this massive on chain bubble. Oh my God. It's going to make your 22 cash flow returns seem funny. And it's also going to monetize the things producing those cash flow returns. So all of a sudden, your shriveled up, dried prune portfolio reinflates, and then you'll have your hindsight perspective. Because I'm telling you right now, but your portfolio is what it is right now. If it reinflates and it goes 100x in the money from here, in hindsight, you're going to be like, I drove myself nuts over nothing. So that's right now. So don't drive yourself nuts over anything. Wait till hindsight. I am DC. Hey, Cap. What's up, my friend? How are you? Another day. It's Friday. I get to relax, hopefully, in a little bit. Uh, Ask it out. As sentiment is very poor right now, while the weekly chart looks pretty sexy. Yeah, I have a little bit long position on Ethereum. I have my Bitcoin, and I'm paying this off because I want to take this. It's ETH. It's about what, six? I don't know. It's like 6 or 7 ETH. I want to throw it in AWA. I should have been I should have been accumulating points on AWA. I should have been doing it much sooner. And in the meantime, I got points coming in here. I'm going to keep the Bitcoin over here on DeFi Money, because this thing is just juicing points because of the VE bonus. But I'm going to take the long there, so and just maybe even take a little bit more, and then throw it into AWA because I'll get something over there, at least some exposure. These points are just coming in hot. I mean, that could be very interesting. I mean, they're literally offering boosted points based on VECRV. There's no other protocol that does that. So what does that mean? What does a licensed fork of the CRV USD software mean? Who's doing it? What's the relationship? What's the terms? What does the points turn out to be? I don't know, but I want to find out because frankly, the interest rates are pretty interesting. With what is it? 292. So it's almost 100% utilization, but the bar rate's 14% compared to CRV USD. You don't need to force a higher interest rate to force price point of money on Optim. Look, because money is a buck. It's over peg. I mean, marginally, it's literally 1,000th over peg. So you don't need higher interest rates. But it looks like the interest rate modifications here to DeFi money are quite interesting compared to CRV-USD, and they can move faster. They don't have governments set up, so they can pivot, pop and weave, and iterate. I think it'll be very interesting once governance is set up and how whatever they have in mind. It's very early innings because you're talking about there's only a couple $1 million, which is pretty interesting actually. 2.14 mil worth of money in existence. I mean, that's pretty cool, even though it's relatively small compared to it's relatively zero compared to competition, but that's base just went up to 35. Base was sitting at like, and this is nice that this is updating minute by minute because base was at like 8 for like a week. It just launched like I believe last week. It's at 8 for a while, but now it just shot up to 35, and these are going up. There's more users. 235. This was like 100 and change, and so was optimism. So I'd like to see this go up, but you can imagine what these numbers will be when everyone's like, "Where the hell am I going to get credit?" Oh, Aave is 30% on dollars. And then you arbitrage it. Ooh, abracadabra is 20%. Oh, CRV USD is 15%. Oh, DeFi money is 3% in a raging bull market. It's right. It's just interest rate arbitrage. There's only so many dollar providers, and now you have obviously Liquidity. I got to get that up there, and Liquidity V2. It'll be very interesting. Also interested in Ramses V3. Y'all saw. Um, Here, let me do this. Top screen, present, share screen, entire screen. Here, Discord. If you go over to here, these three bullets are pretty insane. Those three bullets are pretty insane. Fully immutable. Ah, looks like they're taking full cues from Belgium. Big deal, fully immutable. 2x gas efficiency. The whole reason it's underperforming other things on ARPA is because it needs the velodrome optimization. Once it has that efficiency, all of a sudden all aggregators route through it. That's all an aggregator does. It finds the best price. And then it does exactly what Velodrome did on base and optimism. That's it. This is something I appreciate significantly. Permanent VE. There we go. No more of this stupid locking. And then we got to lock every week so we get exposure. I look forward to this V3 getting out. V3 could come out soon, please. Please, please. Can we get some phantom exposure while we're at it? That'd be nice. A little bit of phantom exposure. Can you deploy to base maybe? I don't know. What the hell? Figure something out. I wouldn't mind some base exposure as well. Thank you very much. Thank you very much. Looks like the BTC peak from last cycle, even better. The BTC peak from last cycle was 57%. I mean, 73%, 73%. So I posted some X posts earlier today. We could go through them real quick. This was ETH. I showed you guys that. It looks good. 50 SMA as well as higher low trend support. 10-year yield, Japanese yen. That's what I talked about a little earlier. DXY, that better hold as resistance. TWAP on the monthly. 6 days. That better hold. Bitcoin dominance. So just above, was that the monthly 100, the lower high trend resistance, and a rising wedge. Confluence from a structural perspective indicates top. When? Oh, fucking hell. Q4 2024. But it indicates that it's likely to reverse. It's a rising wedge. That's a resistance, lower highs. And lower highs make sense, all things considered, the way the system really works, which, I have a great degree of Bitcoin maximalism in me from a collateral perspective. But I think liability fintech is significant. And that is a requirement for a functional financial system. So I think Bitcoin number go up, just like Bitcoin Maximus. And it would be nice to have more Bitcoin, but it's imperative to have uh, settlement currency cash flow. You need both, and a well-structured portfolio isn't healthy with just Bitcoin. Because just have Bitcoin, yeah, he didn't learn anything about economics. What the next 20, 30 years of economics will look like, which is a good part of your life, I'm pretty sure. End stage of the dollar takes 20, 30 years, let's say, from here. Pretty sure you should have a good sense of how this system is going to work. And you don't need just as you need to have a portfolio that's not just big. Even if, let's say, you could have had 100 Bitcoin and you ended with 25 and, um, cash flow, and it equals about the same result. Or maybe you would have outperformed with just Bitcoin. But it's much more meaningful to have a structured portfolio that's participating in how finance actually works. And what is finance? Finance makes the world go around. You can't just have money, you need incentives. Otherwise, humans do nothing. And they just sit there collecting their gold chips, like some shit out of Lord of the Rings, just hoarding. And then you're not lending, you're not really buying because you want to hoard more. How do you get productivity? How do you get people to spend? How do you get people to invest? Okay, so you can't just have like you can't just have collateral, you can't just have Bitcoin. So I think it's much healthier to have a well-structured portfolio, even if you're unable to make the best possible choices to outperform from an investment standpoint. Even if it's worth the tuition, the cost, you get a sense of how global finance actually works. So that's the Bitcoin dominance take. Yeah, it's December 28th, 2020. That's kind of like my sentiment where we are. So this is December 28th, 2020. Or is that where did I get that December 28th, 2020? Was that from a monthly chart perspective? Yeah, no, it's from a weekly chart. So there was your wick, December 28th, 2020. Then we blew through from a lower high perspective, but we're still in the rising wedge, and from the monthly, we're marginally above the 100. So my gut says that everyone's questioning their choices over the years. Maybe I should have just owned Bitcoin, but what did I just say? You really pay tuition to understand how things work, and that's important. So I think things look close. Q4 24 is what sounds reasonable to me. Assoon in the house. How are you, my friend? Arrow, seeing what Aerodrome and Velodrome teams are doing in terms of growth, it is clear to me how important a good BD team is. Curve ecosystem lag. Everyone lacks that. Velodrome's killing it, and they have integration with Coinbase from a base perspective. Sure. Does it mean we shouldn't have exposure to Curve or Kingdom or else? I'll leave that in question form. I don't have an answer to that. I think the only thing that answers that question is time. That's it. I don't think outperformance in this particular environment right now means too much. I think outperformance in this environment right now is an expression of concentration of capital. This is a market right now where people just jam their shit into the only thing that's doing well. But we're not seeing people really invest and speculate on what can or should be doing better. And that's really what that quote unquote bull phase is about, that speculation. And you get the misallocation of capital, you get the bubble, so on and so forth. But you also get that speculation of what people think should be doing better than it is currently. That's the difference between the market we're in right now and where we will be soon enough. Have you looked at mode at all? I haven't. I've been happy you've been, and I'm curious on what your experiences have been. We'll talk on Discord. Interesting how they've been engaging other protocols. Spin on VE, Superchain, obviously the Codex team, Beebus and whatnot. So that's all interesting stuff. Um, do I have would I do I have capital? Not that I really want to spend. What I want to do is farm. And I look forward to next month once my lock unlocks that we've discussed on Discord. But I want to take this little leverage. I want to throw it on AWA. I want to get some DeFi money points, which I already got cooking, and I want to get some AWA points. I don't know why I haven't been doing this. Crank it out 170%. Doing this a long time ago. I do have some points though. This Oh, I'd have to. Yeah, here. Do have some points. A little something. 609. 739. People have a lot of points. I don't know. I moved 11 grand for A. Well, this that's not really that high. Bridge volume. Oh man. I don't, there's no catching up, but I want exposure here. I want these points. So I'm gonna put some LP up in there. What if I get 250 points a day? That's it. Maybe I won't. I want to, but maybe I won't. This thing's 109% collateralized and 96. I'm not just gonna sit back. I'll take some collateral. I'll probably put it to work. Anyhow, still greater than zero. Yes, indeedy. Can we have your thoughts on the tapioca post-mortem? Yeah, it's a hot mess. I found it very interesting. Um, so they're very legal. Um, announcements. Okay. Oh, here. No, I want to go here. It's very legal. I'm not gonna. I'll try and pull it out, but I found like it's literally. Yeah, I'll find it here. Um, like they literally cut him out. Was it Rectora? And no, no, I understand what they did, but where is it? Here, Enigma then performed analysis development processes and recommended that both senior engineers be terminated for lack of expertise, sluggishness, or recklessness. That's a big deal. Based on this recommendation, Pearl Labs reached a compromise. One of the two engineers would be terminated while the other would be demoted to a junior developer role with new experienced engineers who assumed the CTO. That's a big deal because these dudes have been working on this for years at this point, and the where's the oh well I don't know. There's a lot of stuff to digest here, especially order of operations. Was the termination I don't know. I thought the termination was because of the incident, but this looks like the termination caused the incident. Does that right? It looks like the termination caused the incident in this sentence. Well, here's some insubordination, so there's some shots called type shit. Um, where so they took back the vest from these two folks, which is crazy. Matt did talk to about Rectora a lot, and if they're taking away his vest, just can imagine spending 2 years and just literally fucking up prior to mainnet. I don't know, and that's I don't even know if it's which developer it is and who's losing access to what. But this is it's meaningful. I think they have more than a capacity. So they said it was a 45% loss in Dow Capital. But they have more than the capacity to recapitalize the liquidity and relaunch Tapioca V2 from a token standpoint. That's clearly going to impact cash flow or salary or potential for any type of expenses, OPEX, CAPEX. Um, at minimum, my expectation is bringing the state of Tapioca back to pre-incident. And if they're smart about it, they would literally just launch the whole shebang right away. So it's like deploy new token, drop the liquidity, and launch mainnet. That's what I would think is makes the most sense on how to move forward. But we'll see. In any case, I got no capacity to do anything, and I look forward to it finally getting to mainnet because that is a hell of a product that they were 2 inches away from finishing up. Hell of a product. Look forward to it very much. Can you please talk more about that cross-chain stuff and that protocol you just mentioned? Oh, accumulating points. AWA. So AWA runs on Curve. This is Curve. It's literally Curve's bridge. And what I love about it is it uses Phantom as the central place for all liquidity. So it basically does a transfer to Phantom and then a transfer to the destination chain. And it has integration into everything that's really significant. It's not just like, isolated to Optimism or Arbitrum. You got Mantle, Linnea, Gnosis. And once you get to, and then you could use other services as well. Once you get to like Optimism, then you could go to, but you got base integration. So there's direct integration here as well. Significant integration. It's like 27 chains, I think they mentioned. Um, it's just really cool. What I would love to see is CRV in here. Let's see what happens if you go from base. Yeah, so you got base CRV and then Arbitrum. So where's the damn CRV It's not even on Optimism. It's just on base. So that there's some improvement there to be had. And what would be optimal is that CRV had or they do some integration with AWA that makes it similar to the omni-chain fungible token. Because this is crazy. If I used this the other day, and this was wild. It was literally like 30 seconds, and it's not a bridge in the sense of the Stargate transaction or whatever, an AWA transaction. It's literally just like the user interface is dead simple. It's not trying to find liquidity. So it's not like, oh, it's going to get delayed or is it going to clear in 30 seconds or not. It's just burning, sending message, minting. So it's chop chop. There's no delays in this implementation. It was really cool. So I there was a discount on money on base, and there still is 0.998. So I was going to pay back some capital that's borrowed on Optimism. So instead of transferring from mainnet from revenue yesterday to Optimism, I transferred it to base. Bought money because it's at a discount, and I bridged it over to Optimism to make my debt repayment. So the bridge was really cool. Very interesting. Yeah, cross curve, AWA, cross curve, app.crosscurve.finance. So there's liquidity and there's millions of liquidity. That's crazy. That's crazy. It's curve as in a bridge. Come on, look where we were in 21, folks. You think this is an expression of what the market's going to be like in a couple of years? This is such an early indicator of everything that's going to happen. It's fascinating tech. We were back here in 20 and 21. I remember when Curve deployed to Phantom, and we were like, what the hell? How do you even get capital over there? And nothing worked. Nothing worked. Multi-chain XYZ, nothing worked. We had no concept of what the hell liquidity was, I guess, cross-chain liquidity. And just it's like, why would anyone do this? That was Binance Smart Chain and literally just talking about the centralized bridges and how it took like remember when Arbitrum and Optimism launched, there was like the 7 day withdrawal period, and then Stargate came online like a year later, and we were like, oh, fast cross chain capital, and now we're at the point where it's omni-chain fungible tokens and AWA concentrating cross chain capital on Phantom. my mind is blown of where we are compared to where we were in 21. Here we talk about 2019. I got there's no words for where we are. Hope that helps. Adam, good evening from Sri Lanka. Yes, indeed. He hope you are well. Couldn't help but laugh at my timing. Finally, LP to bid into tap ETH Ramsey's pool. I am sorry that experience went south. I I will be very vocal, expecting to be compensated for, well, yeah, for that tap. I mean, now, so what they could probably do is, I don't know. They need to roll back the damn clock to prior to the exploit. And if you had vesting, great from the seed round or what, that's another story. That's an easy one to identify. But there's very few liquidity providers. I mean, I literally provided like the vast majority of liquidity on Ramses. There's mostly tap as well because I only had so much ETH. Was borrowing ETH at one point, but I ended up paying it all back prior to the exploit. So it was all tap and whatever. I had like an ETH or two that I supplied on my own. It was like 25, 26 grand worth of liquidity and maybe bought like 2, 3, 4 grand worth of tap during the slide down. So they do need, fortunately, from a liquidity provider standpoint, there's only Uniswap and the Ramses that I basically started. It was at zero. So they do need to track who is providing liquidity on Uniswap aside from them, aside from the foundation, and the little bit that was done on Ramses, which included yourself, Adam, as you're describing. Um, and we should get that back. I know. I'll be quite adamant about that. It was not a small chunk of change on my end. So, and it might have whatever valuation, but I want that quantity of tapioca. So for instance, well, I'm not going to go through the portfolio, but I have a quantity of tapioca and I want that quantity, period. Hope that helps. Arrow. Kingdom said no base exposure. No! All right, Phantom. I'm cool with just Phantom. I don't need base exposure. Everyone's hot about Coinbase. Coinbase, Coinbase, Coinbase. That's cool. Kraken's cool. Gemini's, all these centralized fucking exchanges. I don't think the world, I think on chain is much more meaningful in the future. And what does that mean? That means Coinbase does incredible things with base. You know what happens to everything else? You know what happens to the entire optimism stack? That's cool. I don't need to be in the same thing as everyone else. I'm okay doing my own thing. I'm okay underperforming. I just want to perform. That's all that sounds like an 80-year-old guy. I just want to still be performant at 80. But that's all that matters. You just want to be in the game because everything bleeds over to everything. If base does crazy well, you're gonna have interest rate arbitrage, geopolitical arbitrage, and geographic arbitrage, which makes much more sense between countries. But it's the same thing's going to happen between optimism chains, arbitrum orbits, um, Cosmos hubs, Polkadot parachains. Why not? I mean, you gotta think more than like 4 years in the future. Shit's gonna be weird in 8, 12 years compared to now. It'll be a completely different world. Okay? So it's exposure. Think in terms of exposure, folks. Are you nibbling on asymmetry? No, I did not. I just don't have the capital, and that's okay. Big fan of Ampleforth, big fan of Spot, therefore fan of asymmetry. Will I have exposure? No, that's okay. Uh, Simple as that. No more investing. I just want to LP shit and just stack. I want to buff it. I'm going to buff it over the next 2 years and stack cash, and it'll be what it's going to be, and then I'll reassess at the end of 25. Raw and Fractal will be a while though. Yeah, they're waiting for V3, obviously. And what it's just going to be what it's going to be. Yes, indeed, my friend. What do you think about Velodrome Superseed? Interesting. I think everything, other than the ego of Velo and Arrow, because Arrow is doing wild because it's basically Coinbase on-chain arbitrage. Everything other than the ego, I like what Velodrome and Aerodrome do. Um, right. They were very quick to respond after Solidly's demise. No bonus points for being quick. No bonus points for being first. Bonus points for immutability. Great. There you go. Bonus points. Um, but look, even as Andre pointed out, some of the most interesting things about Solidly just went under unutilized. So, I mean, the VE33 model is meaningful, but that's only part of what was significant or supposed to be significant about Solidly. Supposed to be a single LPs, and it just handled volatile assets and stable assets no differently. That's what it was supposed to be. But you know, I mean, V33 is a significant improvement compared to VE, but that was only part of what Solidly was supposed to be. So in that regard, I still have a high opinion of Solidly, even though its token has gone completely unnoticed, which is primarily a Phantom deploy, but they're on Arbitrum and they're on mainnet as well. It's just completely ignored by the ecosystem at large. And that's very unfortunate. Roosh and whatever. It is what it is. Sir Joe, present. Last couple comments. We'll wrap it up for today, ladies and gentlemen. Lucian, DeFi money just got zaps. Oh shit! Did just now? Where? I want to zap it to Arbitrum. I'm paying 13%. Where's the zaps? I don't think it got it just now because I closed loan was zap. No, no, 'cause I don't want to sell Bitcoin. Yeah, it's not live yet. I heard about that, Lucian. That's what I want. I look forward to that. But now you could arbitrage the damn interest rate because now you're balancing collateral across deploys, and you could really balance money, and then you get an equal price of money across all chains. That's crazy. Once you get zaps, and so you could balance money because you could basically beam it cross chains with its bridge, and now we could potentially beam the collateral. The arbitrage potential is enormous. I look forward to that. I look forward to that very much. Adam, thankfully, just a small LP test for me, but I'll push to get it. Yeah, no, we're getting it back. We're getting it back. I'm not going to push for the non tapioca denomination. I mean, it was a fair couple of thousand. I think it was like 2.5 ETH at the beginning. Um, but listen, shit happened, and I'll be happy that they get their shit together for a mainnet launch, and they use their remaining capital optimally. So if I get the tapioca, I'm cool with that. And the tapioca retains its original pricing and how well off it was, and I'll be okay with that as well. So I'll consider the Ethereum part of the LP. All right, tuition. But I will be there with you pushing that we get that. Okay, I got you. Weekly income all-time lows. Yep, me too. Is what it is. Waiting for the mark of the market. Not seeing point stuff. Maybe I'm too hands off. Yeah, I don't mind being too hands off. I like being picky. Like, what's my hindsight? I was late to DeFi money. I was very hesitant on new things. But then when it clicked, I'm like, okay, I see what Curve and team are doing and what Mitch is doing with the licenses. It all makes sense. And what I'm curious about who he's where these developers are coming from, and because they're all very tight knit. Everyone kind of knows everyone. It's not like you go to school and 30 people graduate and 30 people or those are like a developer community. No, it's the high end developers tend to be a very tight knit community, small circles. Anywho, have a good weekend, Cappy. Much a pleasure. Basket DCA man, thank you for the live cap. Have a nice weekend. 100S looks weird. That would certainly be weird, but I think that a lot of things. I wouldn't say particular multiples, but I expect some weird shit, and that's from the macroeconomic standpoint. I mean, 104.2. This thing needs to break down, otherwise we got some serious issues economically, internationally, with regard to globalization and repatriation of supply chain. You ain't doing shit at 104. So there's some serious politics. And when I look at these charts, always got to understand the politics. And when you look at this chart, you always got to understand currency. And it's got to get weird. So I'm going to be here for the weird. I just want to be here for the weird. Ladies and gentlemen, Friday, October 25th, 12:39 p.m. Thank you all for joining me. 216 people made it to the end of the stream to get a little bit more rational together. It was a good one. Thanks for sticking around. I wish you all a good Friday. Be good to one another. Stay rational. Always be able to tell a story about the shit you do. So make things make sense, especially to yourself. And I'll catch you, ladies and gentlemen, on a Monday. Enjoy the weekend. Peace.